As an investor, you face a lot of external risks, risks from recessions, from bear markets, but one of the biggest risks that I see actually comes from within. And I'm talking about when investors don't truly understand their own internal risk tolerance. That's what this video is about. I'm going to explain to you exactly what risk tolerance really means and why you need to know. First, if we haven't met yet, my name is Mitch Goldberg. I'm a financial advisor and business owner, and this YouTube channel is about financial education. Now, when a prospective client comes into my office and we talk about risk tolerance, typically what someone will say to me is, well, I want to make money in the market, but I don't want to lose too much money in the market. Well, that's a very general statement that can literally apply to everyone. I mean, everyone wants to make money and no one wants to lose money in the market. So what I want to do with this video is, dial it in a little bit more and really give you examples or definitions of the three main classifications of risk tolerance, which are aggressive, moderate, and conservative. Number one, an aggressive investor is somebody who I would define as someone who is willing to accept big ups and downs in the value of their account, also known as big volatility. This is somebody who's not concerned about the market going down. This is somebody who's investing as aggressively as they can, going for growth, because they believe that over time they will be rewarded with higher returns. Number two is a moderate investor. A moderate investor is somebody who, like the name implies, doesn't want to be as aggressive as an aggressive investor. A moderate investor doesn't want as much volatility. They're not willing to accept such big ups and downs in order to achieve long-term returns. Typically, a moderate investor is also somebody who's not fully invested in the stock market. This is often somebody that's invested in a blend of stocks and bonds. For example, 50% stocks and 50% bonds. Number three is a conservative investor. This is somebody who is not comfortable with a lot of volatility in the value of their account. And this is somebody who's most likely going to invest in money market funds and fixed income. So now that we've discussed the three main kinds of risk tolerance, aggressive, moderate, and conservative, let's get into two other kinds of investor risk. The first one is an investor's willingness to accept risk. The second one is an investor's ability to afford risk. Now, just because somebody has a lot of money and they can afford to take a loss in the stock market, it doesn't mean that that person is actually willing to take a lot of risk in the stock market. So having a lot of money does not automatically mean you're an aggressive investor. And in the converse of that, let's take as an example a recent college grad who just landed his or her first job. He or she just signed up for the 401k plan for the first time. This is someone who can afford to be an aggressive investor because the money that they're investing in a 401k plan, they're presumably not going to need that money for a very long time. And they are young. They have plenty of years ahead of them, so they can afford the big ups and downs in the stock market in order to achieve higher long-term returns. Now that we've defined the concept of risk tolerance, the key is now to understand why it's important to know. And the bottom line, the way I describe it to people is you just don't want external factors like recessions, bear markets, short-term swings in the market. Also, you don't want external factors to scare you out of your long-term investment plan. I hope this video helped you out with your understanding of risk tolerance. If it did, please give it a thumbs up and subscribe to my YouTube channel. If you are exploring the possibility of working with a new financial advisor, you can reach me at ClientFirstStrategy.com. Let's have a talk and we'll see if we're a good fit. And until next time, thank you so much for watching.